And I saw hospitality as something where I could invest money in that shared a worldview that I have, which is I want to create spaces where people feel welcome. It is the only commercial real estate asset where you can make more money just by changing the brand on the wall. But you don't get there through like people telling you yes all the time
Right.
because the path is too easy. No pain, no expansion.
Welcome back to the Leadership Puzzle, where we explore the real challenges leaders face and the innovative ways they're putting the pieces together. I'm your host, Jeff Lipinacci, and today we're taking a bold look at how capital is flowing into the hospitality industry and why some of the smartest investors are rethinking everything from valuation to asset strategy. My guest is William Huston, the NAACP Entrepreneur of the Year and the Forbes-featured Entrepreneur, who's reshaping the way that we think about the hospitality investments. Outlets like Yahoo Finance have recognized William as one of the nation's top financial leaders, and he's leading the shift from traditional real estate models into what he calls real businesses in hospitality. So we're going to dive into where smart capital is heading next, how technology is changing asset valuation, and why hospitality is outperforming multifamily units in ways that might surprise you. So let's get started. All right. Hey, Will, thank you so much for joining me on the Leadership Puzzle today.
Thank you,
Well,
Jeff. It's great to see you.
I'm in your home state of Alabama right now. If most of my viewers will see the background is different. I'm in a hotel, and so it's really appropriate that we're talking today, given how your career has shifted and evolved. But I love your history from Alabama to Georgia Tech to Philippines, and you're now in Singapore. So thanks for joining. Tell us how did you get there? Let's do the quick overview of how you got there.
Sure. I didn't know you're in Alabama today, so that's awesome. There's no place like home, I guess you will say. So hope
Yeah.
that you have a good time while you're there.
Sweet
Meet some
home
great people,
Alabama.
have some good food. That's right. That's right. That's right. In terms of how I got here, as you said, went to Georgia Tech. My freshman year at Georgia Tech, my father became disabled. And when that happened, in Georgia, if you work for a year, you can get in-state tuition. So I actually started my business with the desire to, you know, go to in-state tuition. And the book that I read back then was a book called The 4 Hour Work Week. And I decided that I would start a call center because in my 19-year-old brain, I said, oh, I could get a client and then the call center could do the work. I think if I spend 4 hours a week looking for clients, maybe I could get some. And that sort of snowballed into a 10-year saga of building a call center. And once it was all said and done, the major sort of work we were doing was with the federal government. We did phone calls for something called FEGLI, Federal Employee Group Life Insurance, and the Thrift Savings Plan. And we basically worked with insurance companies like New York Life, MetLife, Mass Mutual, those sorts of groups that were servicing federal employees when they would leave the government. Yeah. So
Yeah.
fast forward, got married, moved out to the Bay Area, and started a firm called Bay Street Capital Holdings. It was a wealth management firm where we were investing in the public markets using a lot of data and fundamentals. There's a term called quantamental. And we sold that business. And after selling it, we got interested in hospitality as a focal point. We were always investing in the asset class, but it was just
Right.
one of the many things that we were investing in the public markets. And we felt that there was a real opportunity to apply what we were good at in the space uh, to the hospitality market because it's a bit older, it moves a bit slower. Really, it wasn't as transparent as we felt that it could be. And that was what started Bay Street Hospitality.
Oh, that's great. Now you've been recognized by changing how you look at hospitality and capital and how capital flows into hospitality. Talk to us a
Mhm.
little bit about, what was broken in the traditional view and how your
Mm,
model is really fundamentally different. This is just super interesting to me.
sure, sure. So, like I said, initially, we were a wealth management firm that would diligence funds and managers. So our job when we were running a wealth management business was to look at all the investable options, look at the managers running those funds, and then determine which ones would do the best job for our investors. And when we looked at hospitality, we didn't really see a solution to the way that we wanted to express the investment thesis. And the more we looked into it, the more we realized like really no institutions were satisfied. And you see
Okay.
that in the data. So right now, less than 2% of institutional capital gets allocated to hospitality. And when you think about that, initially you would say, well, it kind of makes sense because it's volatile compared to traditional commercial real estate. So if I approach you and I say, hey, I'm going to build, an apartment complex, an institution likes that. They know, how much it's going to cost. They know how much you're going to charge in rents. They know that these rents are going to be annual. And from a cash flow and from a projections standpoint, you have a pretty good idea of what's going to happen when the apartment complex is built.
Yeah.
But it's completely different with hotels. It's you have to sell the rooms every night, not once a year. And you
Right.
also change the rate of the room multiple times throughout the day, right? And so from a volatility standpoint, most institutions will say, I don't like the way that sits because it's hard to balance. Or not balance, but it's hard to determine what's going to happen when you make
Yeah.
said investment. And the more that we thought about this, the more that we actually thought, yeah, sure, that's true. It is more volatile, but pensions also have liabilities where they're paying the retirees, right? And so there's this issue of like liability matching. If they're going to invest in something, being able to match that liability to said investment with the unpredictable yield, uh, it becomes sort of like a pariah in the commercial real estate space.
Sure.
And so what we wanted to do is we wanted to uh, sort of address this scarcity by addressing the blind spots in the diligence process.
Okay.
So the idea was to build a process that would bring transparency, to the investment process and the investment logic so that an institution could clearly understand what they're investing in,
Yeah.
as opposed to feeling like that volatility is a result of just uncertainty, not
Sure.
market dynamics. Yeah.
Yeah. Well, I mean, that makes a whole lot of sense if you can, because the market hates uncertainty. So if you're able to bring a
Mm,
little bit more certainty into it, then
mm, mm.
I can see why that might be a more attractive investment for folks.
Sure. Sure. Yeah, I
But
think the idea, instead of, when we said, how would you get more than 2% into this, the thought process wasn't like just get more. It's like it has to be smarter, always learning, sort of
yeah,
like a dynamic approach. And something that we felt was possible was taking more of like a zoomed out view as opposed to focusing just on the single asset. So I think that's something that's a bit different in terms of how we're approaching the market is it's much broader than the typical approach where you're either very region specific as a
yeah,
fund manager. I invest in Alabama because I know Alabama, or I invest in, the US because I know the US. We're looking globally across opportunities. And that allows for certain arbitrage opportunities to show up if
sure.
you know what levers to pull.
Yeah. So, you talked a little bit about apartments, multifamily kind of real estate. I know that was all the
Mm,
rage. We talked, my son-in-law even was like really interested in, oh, how can I go buy an apartment complex? Um, but you said that hospitality is actually outperforming, kind of that multifamily real estate. What do you think's underlying that shift? What's driving the performance of hospitality in general? I mean, obviously, since COVID, I've seen a bunch of like hotels and hospitality and stuff as conferences and all that have come back into rage. But talk a little bit about just that dynamic of what's happening in hospitality and where do you see it going?
sure. Well, I think if you compare like multifamily to hospitality, for example, multifamily gives you rent Hospitality is giving you the opportunity for operational return upside, right? So
Okay.
hospitality is it is the only commercial real estate asset where you can make more money just by changing the brand on the wall, right? Like if you change the name of your apartment complex, that's not going to necessarily change the return profile. But if you change the name of a brand, at the moment, certain brands consumers expect to pay a certain amount of money. And hotels are one plus one, right? You can either increase the income of the asset or you can increase the value of the asset. Uh, and from an operating standpoint, if you're running the right sort of operation post investment, you really do have an opportunity to increase that net operating income. So yes, you want to diligence, location sort of deal, and make sure that you identify an asset that is going to give you the opportunity for outperformance. But I think a big part of hospitality that gets overlooked is post investment. Who are you working with from an operator standpoint to drive outperformance in these markets where you view that outperformance is worth the time and the effort that you're going to put into running the asset? It's not it's much more labor heavy, I think you
Yeah.
would say,
Yep.
which is why a lot of back to this sort of institutional issue, a lot of the uh, institutional allocators are also trying to measure number of jobs created, number of women employed, like especially in emerging markets, second and third tier cities. That's a really big, you could say, focal point for institutional capital. And the reason why they want to be able to deploy more efficiently into hospitality is because it's a very employee heavy sector, not just for the hotel itself, but for the indirect jobs that are created as well. So, you put a hotel somewhere and there's lots of jobs that can be sustained just by servicing the hotel.
Yeah.
And so, yes, that's I would say that's the main reason. It's the operational return upside that's available in hospitality, and it's not just tourism driven. Like it's not like cyclical where you say hotels are outperforming now because more people are traveling. If you identify the right assets, you can sort of perpetually be in this outperformance mode
Interesting.
if you're operating at a level that's outperforming your competition. You see.
Right. Yeah. Yeah. Now, I do a lot of travel. I know you do a lot of travel, and
Mm.
many of the listeners are also kind of these global travelers, and not all hotels are the same. Even not all hotels within a brand are the same. So there does
Mhm.
require an element of capital to keep the hotels up and going. But I love your thought of uh, different than multifamily or other kind of real estate. You A hotel or hospitality has this opportunity for almost an exponential amount of growth and income coming back through because of services and conferences and everything else that goes with it. And maybe that's not the way to
Yeah,
look
I
at
think
it.
sure. I mean, every market is different, but another thing that's unique about hospitality is when you invest in a business, there's actually two businesses. There's a standalone real estate, which is one group of investors, and
Hmm.
then there's the operator, which typically does not own the assets, called being asset light, right? So
Ah,
the operators of these brands don't own the underlying hotels. And I think the word you used when you said income, like, it's hospit like the future of hospitality is going to be driven by the people who own cash flows, And another sort of like quant concept that we've been thinking through as a team is how do you own that cash flow, So you might have heard of something like factoring, for example. It's a very common sort of
yeah.
financial product in the market. Uh, we've been contemplating a product that's using the cash flows that we know is readily available in these hotels through something called a hotel management agreement, and then building something for the derivatives market for the individuals that want to be able to trade against those cash flows. Um, but it's not built yet. So, I've already said too much. It's something I'm excited about, and I'm
Okay.
happy to think through. But yeah, I think you probably conceptually see what
I
we're
do.
contemplating. Most
Yeah.
hotels have like a 7 to 15 year contract, and there's no way for the investment community to really trade on that, again, sort
Oh,
of contractual income, you see.
right. Yeah.
So with scale, I think that there's really a nice play for people who want to trade cash flows in the hospitality space, and they do this in other markets, which is, as I said, hospitality is sort of slow moving. And with our quant approach, I think that we have a lot of the sort of data points necessary for an investor to come in and then say, you know what, I'm actually going to just trade the last 5 years on this, on this management contract, and there will be somebody who will take the other side of that trade. You see.
Yeah. Yeah. Hey everyone, I wanted to share something that is really near and dear to me: preparing leaders for the rise of the third workforce. As we move into this world where human teams are working alongside AI and digital talents, I'm really passionate about helping managers navigate this transformation. So, besides finding great talent at Evolve, I also love teaching them how to thrive in this new blended workforce. So we offer workshops and training sessions to help your managers get comfortable leading teams that include both human and AI coworkers, because preparing your leaders today to succeed in the future is critical. So if this sounds like something your organization could benefit from, well, I want to help out. So check us out at evolvehrs.com. That's evolvehrs.com. And let's get your leaders ready to lead in the era of the third workforce. Now back to the show. Now I want to kind of shift a little bit and focus on kind of your leadership and whatnot. I mean, we had just a great conversation when we went to start the video, the recording before, and it's like, oh, it's not quite the best lighting and everything. So we just talked,
Sure, sure.
I'm gonna, anybody who just wants to talk to Will and hear more about what he's done, amazing. But I think there's some leadership things that kind of jumped out at me. You were able to get some big institutional, some big names to invest in you early on. You've also had some interesting challenges getting institutional players to invest in in the U.S. And so you've had a whole lot more success internationally. So just talk about the leadership that you've had to come in and that resilience of having to just keep going after what is a good product and a great solution for these institutional investors.
Sure, sure. Well, I definitely wouldn't say that it was early on. I started when I was 19. I'll be 39 in a couple of days. Um, and I would also say I was very fortunate to have extremely hardworking parents. Like the example that was set before me was wake up before everyone else, and just like work your way through it. Just outwork the competition. My dad used to say that you can make a living by working with your body or working with your mind. So you're gonna either pick right now which one you're gonna which one you're
Yeah.
gonna do. As I mentioned, he played football. That was how he became disabled. And so I just sort of grew up sort of in this like hard work thing. But
Yeah.
hard work, I don't think is enough to make you like continue building and iterating on something despite the thousands of no's that you're going to be faced with in one form or another. Like it's not always just a verbal no, but there's always some sort of hurdle that you're facing when you're trying to build something. And again, I think I've been really blessed that I've come into a space where I'm very passionate about the work that I'm
Yeah.
doing. It's that passion that, you know, helps you go the 16, 17 hours a day, thinking about the same problem over and over without finding it mundane or boring or like wanting to shift to something else. And so I would encourage, anybody, if you're in a state like that, better to sort of continue searching for your passion and finding out what is that purpose that I have. And for me, what started out as a desire to invest in hospitality, I've been able to iterate this product so that it is, defendable and auditable and investable. But the initial idea was I want to invest in the right people. I want to invest in the right places that deserve the capital. And I
Right.
wanted to be able to invest with purpose. And I saw hospitality as something where I could invest money in an operator or a developer or an asset owner that shared a worldview that I have, which is I want to create spaces where people feel welcome. And I didn't know how to do that in the public markets. And so I wasn't very passionate regardless of the level of success as I was spending more of my time in the public markets. I
Right.
really wanted to be able to touch and see and feel this impact that I was going to have if I was going to spend, such long periods of time pursuing building something.
Right.
So yeah, I would say just it's we used to have a picture on our website that said "Passion led us here." It's one of these like white label pictures. I think probably like thousands of websites. You've seen that picture. So it's
Yeah.
like paint on the ground. It says
Yeah.
"Passion led us here." Very true. It's whoever had that idea is a great idea.
I love that. Passion led us here. And
Mm,
I think that is for an entrepreneur,
mm,
passion really has to be at the core of,
mm,
because you're right. You just get tired doing 12, 15, 18-hour days if you don't love
mm.
what you're doing.
That's right. That's right. Even if
Now,
you do, you get tired, but at least you're like, this is exactly what I want to spend my time doing to be
exactly.
tired. Yeah,
Exactly,
yeah.
exactly,
Mm,
exactly. Now you were named NAACP's Entrepreneur of the Year, and you've been featured by Forbes. This is the leadership puzzle. So, what has been the most pivotal leadership decision that you've made on your journey as you've bobbed and weaved across these different enterprises that you've been building and selling?
mm. I think the biggest impact for myself personally that bled into my team was maybe 2 years into this product. I came to the conclusion that we were going to have to accept what failure would look like. You get my point? And I had a meeting with my team and I said, guys, we're going to have to build something that we're so confident in and so proud of that if we don't raise the money, we can wash our hands and say what we built was outstanding.
Yeah.
Like could compete with anyone anywhere in the world. And so let's pursue that. Let's not get caught up with all of the inconsistent feedback or all of the frustrating, meetings that we're going in and out of. Yeah, I mean, you really have to think. It's actually very frustrating to raise money as an emerging manager or as for any first time fund that's not sort of backed by a spin out.
Yeah. Yeah.
Um, and having a team that's so used to being first place. Like I just bought a T-shirt. It was F1 here last week, and I bought a T-shirt that says is the guy Senna. It says something like, "I'm not designed for second or third place. I'm designed to win."
Yeah.
And in the investment management space, it's sort of like sports. Like you're building this team of outliers who have outperformed their whole life. And that's what convinces them they can go start a fund. You see what
Right.
I'm saying?
Right.
And so, yeah, we really had to like put our heads down and say, you're right, like let's go back to our roots. And this concept of quantum mental hospitality investing, it didn't exist. Like it was almost as if we were like making up a dictionary as we were going along, saying,
Yeah.
this is how we're going to apply price to sale of public metric to hospitality. We're going to take the price of the asset, divide by the 12 months trailing revenue, and then we're going to overlay that, with some STR data, and then we're going to, benchmark that against like the let's just say like the spread between treasuries in the US in this market we're looking at, and that's going to give us an actual sense of like, is there alpha in this project? But you don't get there through like people telling you yes all the time
Right.
because the path is too easy. You see what I'm saying? So we had the path, I think that you gotta, I used to do a lot of P90X. Tony Horton used to say
Oh,
like,
love
enjoy the
it.
journey, right?
Yeah. Love
Yeah,
it.
yeah, you gotta enjoy the journey, like it's hard, but you know, no no pain, no no expansion,
Yeah.
so I really think that um that was the big moment, when we had
Yeah.
that meeting and we decided, like, what were we going to do? We're going to go get some jobs or something, or do we really want to double down on this and say, no, actually, we think that we can be exceptional, like remembered as exceptional
Yeah.
investors in the
Yeah.
hospitality space, and allow this effort to start compounding for us over time, and build something that, again, quite frankly, probably everyone to have some very data centric approach to investing in all asset classes in the future. But we want to be spending our time in a way that where we can look back and say we had a big part to play
Yeah.
in the hospitality sector for institutions looking to deploy capital
Love it.
efficiently.
Love it. Love it. Love it. Love it. Okay. Well, unfortunately, we run out of time. How can folks get in touch with you if they want to hear more about what you're doing?
Sure. I like WhatsApp. You can message me on LinkedIn, but LinkedIn is difficult from a communicating thing. I just, hit me on WhatsApp. My number is 1-650-464-8275. And I'm always on WhatsApp. It's the fastest way to catch me. Yeah. Don't
All
leave
right.
voicemails. I don't listen to voicemails, and don't leave voice notes. Those are unfair. Just quick
Okay.
text.
All right. Well, I'll get that number from Will, and we'll put it in the notes section. Well, Will,
Sure.
thank you so much for joining me today. This has been, truly insightful, and we'll have to have some more conversations at a later point because we haven't even scratched the surface.
Thank you, Jeff. You're kind. You're too kind. Appreciate you highlighting our work and platforming me. Thank you, bro.
All right. Well, if this conversation has sparked new ideas for you, make sure you reach out to Will. And on LinkedIn, he does have some good videos and whatnot that you can hear more about what he's doing. And if you know someone in the investment or real estate world that is thinking about their next big move, well, be sure to hit him up. And of course, as always, if you've enjoyed the leadership puzzle, don't forget to like, share, and subscribe to our podcast. Until next time, keep leaning, keep learning, and keep putting pieces together. See you soon on the leadership puzzle.